Good morning, traders. It's Thursday, February the 6th. Taking a look at the charts. Another big up day yesterday for the equities market, testing up near these highs, and boom, today the market pops to all-time new highs on the SP 500, and more or less the market flipped to an uptrend. If we go and take a look at our short-term trend analysis here, actually I'm going to pull up the mixed markets. So here's the morning charts with our analysis that I draw on each day. And what we're looking at here is more or less we saw the equities market. We got out of our long position somewhere right over here. And then the market went into a sideways chop. And as we got out of the market here for about 6.5% on average on our entire position there, we got long the bonds, and bonds moved up. We hit our target of about 3.5%. We took some more off yesterday because things are starting to fizzle out in terms of, while the stock market traded sideways in this big volatile range, we played the upward move in bonds. And now you can see here we had orange bars, and now we're into green bars, meaning the market is technically back in an uptrend. The momentum is behind it. Big money is flowing into the risk-on assets like more or less out of utilities, or equities are outperforming utilities, and they're moving into the building sector. Bonds are pulling back. So the safe haven plays are underperforming. The stocks are back into an uptrend. And when they get into an uptrend, we want to start to scale out of the safe havens bonds, because these could continue to collapse, or they might trade sideways and hold their ground for a little while, which is what I think could happen. I think at any point we could see the equities market have a quick pullback, and I think bonds could have a quick pop, and we could actually exit bonds at the rest of our position at a higher percentage, get out of it, and then we can move that money into the equities market for another move going higher going forward. Now, overall, bonds are oversold. You can see, it's hard to see actually, but our hashtag here, our green hashtag is here, indicating we, yesterday it traded below this area. So it's oversold. It is still technically in an uptrend, but the momentum is shifting from risk off into the risk on. So we want to start to trim off there, put money into work in the equities market. Gold pulled back over the last two sessions. It's oversold. It's what these lime green areas mean. And today we're seeing gold have a little pop up. Really everything's trading higher this morning. We're seeing bonds a little bit higher, gold's higher, stocks are up a quarter or 0.4%. So we're seeing all these things move higher together, and we're kind of positioned with a bit of a mixed market, kind of hedging each other, but we are still in play for increased or continuation of increased fear in the market, which bonds should continue to move up along with gold a little bit. And if the equities market, this trend, new trend continues, we'll be set for a pretty significant rally in equity. Now, let's just go back to the overall market. Here's the chart. The daily chart of bonds, you can see how it's unwinding. We had a really nice rally and breakout move. It's unwinding to the downside. Today it's going to open slightly higher, relatively flat. It is starting to get down into these previous highs here. There's still some more downside for it to potentially tag these areas. But overall, I think we're set for a bounce potentially here in the safe havens. Looking over at gold, it's up 0.3%. Got a little oversold, close to the 20-day. We're getting a bit of a bounce up. Notice we are under the 5-day moving average, which is this blue line here. And we'll see how things shake out over the next little bit. If we look over at silver, it's up 1% this morning, so we're seeing a nice bounce in silver. And if we look at gold miners, the GDXJ, it broke below this previous low. It's kind of hanging on a thread here. We are under the 20-day. We are under the 5-day. We'll see if we end up getting this ABC correction, which is what I've talked about before. It's actually a bullish sign longer term. ABC correction means we get an A, B, C correction, and the C correction is what's critical. You break a previous pivot low, and right when you break this low, the market goes into a high volume panic sell-off. Potentially, if we break this low and this low, we could see some big washout low, and then followed by a big move to the upside. And it's the ABC corrections really cleanse the market, and they usually make for a stronger move going forward. But overall, I would be happy for this to continue to trade in this area and break out versus us having to hold through a drawdown or potentially getting shaken out of the trade depending how far price pulls back. Looking over at natural gas, is down 1% this morning, still struggling, starting to trade more through this 5-day moving average, but overall it's still trading sideways in this range. I think any day here we could get a very strong pop and move, but overall we're bouncing along this more or less this oversold territory and this downtrend, and we might end up getting stopped out of our play, but overall we're hanging in there by a thread. Our stop hasn't been hit. Could get tagged today with UNG, with it being down, natural gas being down 1%. We'll see how that unfolds today. Crude, nice pop yesterday. Ended up having a really strong rally at one point, closed back below this 5-day. Today in overnight trading, we saw a big strong move back higher to some higher highs, and it's starting to sell back down, and could end up getting back underneath this 5-day moving average. It's starting to really struggle here. At this level, we're starting to get some more bounces, and of course this is a significant support level slash breakdown zone. So the market right down here, this is a really critical level where we had days close and tag these levels. So we kind of broke down and we're flirting with this area, and it might consolidate here for a little bit, build a little bit of a bear flag, and then potentially break down from that level and go much further to the downside. Last but not least, taking a look at the UUP, which is the US Dollar Index ETF. More or less, we've got this, you could draw a downtrend line here. We do have this big gap, the dollar. This because the UUP actually pays a dividend. A member actually pointed this out. It looks a lot different UUP on my chart than it does on stock charts. On stock charts, this price is somewhere trading up into this area. The whole chart is skewed because mine shows when a dividend gets paid out, it comes out of the price just like a normal stock. So depending on the chart you're looking for UUP, it might look different, but the grand scheme thing here is that the chart here is showing we do have an A, B, C correction. You can see how the C correction is a huge move to the downside. It flushes out below this low. It broke a couple other significant lows, another low over here. It creates this big washout low, and that usually can set the stage for a pretty big move. Now overall, we are coming into really critical resistance here. It's had a nice pop. We'll see where the price moves, if it can work itself up here, but if the dollar eventually starts to move down and break here, this could be a really significant head and shoulders formation with a neckline. You could argue it's a big ugly head and shoulders somewhere in here. If it starts to break this pattern to the downside, this move down in the dollar will spark precious metals to take off, and of course a breakdown from this level I think would send them parabolic and really take off. So there's some potential setting up for the metals market. Obviously gold miners, silver have been under pressure for a few weeks, and that's one of the reasons is because the dollar has been really in a strong rally mode, keeping them muted and under wraps. So overall, if the dollar starts to roll over here, it could be the start of the big breakout we're looking for in gold miners and silver and all those things. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.